This is the old gold promise America broke in the early 70s. The country told the world the break was temporary. And if I'm being honest, that word temporary may be one of the most expensive words in modern financial history. Today I'm going to show you the 7 pieces of this story that most people skip. But piece number 5, that's the one that explains why gold makes powerful people so uncomfortable. And it's probably the part you're feeling right now without knowing how to name it. This is Monday, May 25th in New York. Comment the day and date you're watching from because I want to know where this conversation is reaching people. And if you value this work, subscribe and comment Our John AG. That's it. Simple signal, simple support. Before we get into the 7 pieces, I need to set the table here. Gold is not a villain. Gold doesn't vote. Gold doesn't print. Gold doesn't run deficits. It just sits there, quiet, heavy, and annoyingly honest. And that honesty is the problem. Because when a system is built on promises, debt, refinancing, rolling balances, political deals, emergency programs, and constant explanations, the last thing that system wants is a metal in the room asking one simple question. What is this promise actually worth? So this isn't going to be some fantasy where gold fixes everything overnight. I'm not going to tell you that every problem began the day America left gold, because that's too easy, and honestly, it's not serious. Wars matter, demographics matter, voters matter, Congress matters, entitlements matter, interest rates matter. But gold matters for one reason that gets buried under all the noise. Gold creates limits, and modern governments hate limits. All right, let's go. Piece number 1. America still holds the gold, but it doesn't want to talk like gold matters. Based on recently published numbers, the United States still reports more official gold than any other country, a little over 8,000 tons, or more than 250 million troy ounces. That's not a small footnote. That's the biggest official stack on Earth. But here's the weird part. On government books, that gold is still valued at an old statutory price from the early 70s, not anywhere close to market value. At market prices, that metal is worth well over $1 trillion. On paper, inside the accounting system, it looks like a fraction of that. Ask yourself why that matters. Because if gold is just a shiny rock, why keep so much of it? If it is irrelevant, why store it in guarded vaults? If it is obsolete, why do central banks still add it when the world gets nervous? That's the contradiction. Publicly, the system treats gold like history. Privately, it treats gold like insurance. Piece number 2. The break with gold was sold as a short pause. In the early 70s, foreign governments could still bring dollars and demand gold under the international system. But too many dollars had been created, too many claims were floating around, and the gold backing those claims was under pressure. So the window closed. The language sounded temporary, the result was permanent. Now, people argue about whether that decision was necessary, and to be fair, the old system had serious cracks. It was not some perfect machine. But once the link snapped, a new habit became easier. Spending no longer had the same hard wall behind it. Politicians still had markets to worry about. They still had inflation to worry about. They still had voters to worry about. But the old redemption pressure was gone. And once that pressure disappeared, fiscal discipline became more optional. That's where the story changes. Piece number 3. Debt did not explode because gold disappeared. It exploded because people learned they could postpone pain. That's the key difference. Gold didn't cause the debt. Gold was one of the old brakes. Removing a brake does not force the driver to speed, but it makes speeding easier. And once speeding becomes normal, slowing down feels like a crisis. Look at the current setup. The federal debt is now around the high 30s in trillions. The annual deficit is running near $2 trillion. Recent official projections show debt held by the public climbing to levels above the post-war peak within the next decade. And the part people ignore is not just the debt, it is the interest. Interest becomes the bill for yesterday's decisions. It doesn't build a road, it doesn't secure a border, it doesn't send a check to grandma, it just pays lenders for money already spent. That's why gold is dangerous to the narrative. Gold doesn't let you pretend time is free. Piece number 4. Central banks are not acting like gold is dead. From recent market updates, central bank buying stayed strong into this year, even while prices were already historically high. That tells you something. The buyers at that level are not chasing jewelry trends. They're not buying because of a commercial. They're building reserves. They're creating options outside the dollar system, outside sanctions risk, outside the political mood of any single capital. And this is where people get emotional. They say, well, China buys gold, Russia holds gold, therefore gold is anti-American. No, that's lazy. Gold is not pro one country or anti another country. Gold is neutral. That's what makes it powerful. A dollar depends on trust in the issuer. A bond depends on trust in the borrower. Gold depends on nobody's promise. That is its entire job. There is another detail here that matters. Gold has no yield. So when investors buy it aggressively anyway, they are usually saying something without saying it out loud. They are saying trust is becoming expensive. They are saying the old comfort of holding paper claims is not enough by itself. Recently, even with prices near record territory, investment demand and central bank demand stayed resilient, while jewelry demand weakened. That mix is important. It means gold is behaving less like a luxury item and more like financial infrastructure. Not for everyone, not every day. But when the world feels unstable, the metal becomes a balance sheet decision, not a fashion decision. And that is exactly why the people managing systems pay attention to it, even when they publicly laugh about it. Piece number 5. The system wants to weaken gold because gold exposes the difference between money and credit. This is the part most people miss. Credit can expand fast. Gold cannot. Credit can be voted into existence. Gold has to be mined, refined, transported, stored, guarded, and accounted for. Credit loves emergencies because emergencies justify expansion. Gold doesn't care about emergencies. It doesn't care if the speech is emotional. It doesn't care if the program sounds compassionate. It doesn't care if the war sounds necessary. It asks the same boring question every time. How are you paying for this? And that question is brutal because the answer is usually not taxes today. It's debt today, inflation tomorrow, or both. Now, I want to be careful here. A strict gold standard is not magic. It can create its own problems. It can squeeze credit at the worst moments. It can turn bad policy into painful deflation. It can punish ordinary people when politicians defend the wrong exchange rate instead of admitting reality. So, no, the answer is not to worship gold like a religion. But dismissing gold completely is just as foolish. Because gold's real value is not that it makes politicians good. It is that it makes bad policy harder to hide. Piece number 6. The welfare state and the war state both need elastic money. This is uncomfortable, but it's true. Big permanent programs require permanent funding. Big military commitments require permanent funding. Bailouts require emergency funding. Crisis responses require instant funding. And once voters get used to promises, every reduction feels like betrayal. Social Security started as a backstop. For many Americans today, it functions as the main retirement pillar. Recent public data show that for millions of recipients, Social Security is most of their income, and for a large group, it is the only income. That's not a small change. That's a national dependency structure. And whether you love the program, hate the program, or think it needs reform, the math still has to clear. That is where gold becomes politically inconvenient. Gold does not care about campaign slogans. It does not care which party is in power. It does not care whether the spending is called defense, healthcare, stimulus, infrastructure, relief, or investment. If the claims expand faster than the productive base, the pressure shows up somewhere. Sometimes it shows up in prices, sometimes in taxes, sometimes in bond yields, sometimes in currency confidence, but it shows up. Piece number 7. The rest of the world is quietly hedging. This does not mean the dollar collapses tomorrow. Be careful with that kind of fear content. The dollar still dominates global reserves, global trade invoicing, debt markets, and emergency liquidity. When panic hits, money still rushes into dollar assets. That is real. You can't just wish it away. But the direction matters. Recent Treasury data showed major foreign holders trimming some exposure. China has been reducing its Treasury position for years compared with its old peak. At the same time, countries have been increasing gold allocations, building local payment systems, and looking for ways to reduce single-point dependence. That doesn't mean they are dumping America overnight. It means they are building escape routes. And if you were a central bank watching debt climb, deficits stay large, and political fights repeat every budget cycle, wouldn't you want a little more insurance too? Here's the part nobody likes. The system does not need to ban gold to attack it. It can mock it. It can tax it awkwardly. It can treat it as a collectible instead of money. It can make people feel outdated for holding it. It can push the idea that wealth only exists inside digital accounts, brokerage screens, pension formulas, and government promises. That's the subtle version. Not a war on gold with tanks, a war on gold with framing. But people still find their way back to it during uncertainty. They did it during inflation scares. They did it during banking stress. They did it during geopolitical shocks. They did it when real rates looked unstable. They did it when trust got thin. Gold keeps returning because trust keeps getting spent. So let's summarize this. Number 1, America still holds enormous gold reserves while publicly treating gold like yesterday's story. Number 2, the gold window closed as a temporary action, but the temporary became permanent. Number 3, debt grew because leaders learned to delay pain. Number 4, central banks are still buying gold because neutral reserves have value. Number 5, gold exposes the gap between real money and expandable credit. Number 6, permanent promises need elastic money. Number 7, the world is not abandoning the dollar overnight, but it is hedging against dollar dependence. These are not conspiracy points. These are survival signals. And here's the choice in front of every viewer. You can ignore gold because it doesn't pay interest, doesn't blink on a screen, and doesn't promise quick gains. Or you can understand why the same institutions that tell you gold is outdated still refuse to let go of it themselves. That doesn't mean you put everything into gold. That would be reckless. It doesn't mean you panic. Panic is how people buy tops and sell bottoms. It means you think clearly. You ask what your savings are exposed to. You ask how much of your future depends on promises from people you will never meet. You ask what happens if inflation stays sticky, if deficits stay large, if interest costs keep eating the budget, and if foreign buyers demand higher compensation to hold American debt. Those are not doom questions. Those are adult questions. So comment below and tell me this. Do you think gold is still money, or is it just insurance now? And second, do you trust the current system to control its own spending without a hard constraint? I actually want to see where people stand on this because the answer says a lot about how you see the next decade. If you're successful, share your success story in the comments so others can stay motivated. And if this gave you a cleaner way to understand gold, subscribe to the channel. Short version, stay informed, stay disciplined. Don't let anyone shame you for asking what the promise is backed by, because the metal is not the threat. The mirror is the threat. Gold simply reflects what the system does when nobody forces it to stop. And a system that hates the mirror usually has something it doesn't want you to see. This video is for education and discussion only. I'm not telling you to buy, sell, or hold anything. Markets move, policies change, and your personal situation matters more than any online opinion. Think for yourself, do your own research, and never risk money you cannot afford to lose.